Welcome to TradeTheMBI.com. This is John's report for the 24th, and well, the rally is looking, nice as far as the move goes. Really pathetic from a shakeout standpoint, meaning we're not getting strong thrust of support. We're barely just getting back to even here on the daily for the ES. So, quick damage. It's been brought back. We're still at a status quo. I think people are just waiting to see what the effects of the international travel as well as any new deals. They're getting a lot of headwinds back home. We're seeing lower growth potentials. Now, fine, everyone's ignored that, but the reality was they ignored it because this drop was just a blip in the political upheaval. The euro giving back a little bit. That we know that it's going to do that because we've got a lot of positive extremes. We've moved way over the 13.5. Crazy amount of push into the euro recently. Once they get the momentum started, though, it's easy to take this. You'll see that happen with gold and other commodities. When you've got a group on the run, you mercilessly punish them. And this is a weird one because now you have bonds fading as we would expect them to. Contrary to that, though, you would expect that we would have weaker oil prices. Not happening. Still on a steady rise. Now, granted, this has been oversold, and I think that the baseline is probably somewhere between 11 and 12 range here for USO. However, supply is still a huge problem, and as much as even OPEC addresses it slightly, the ability of the U.S. to continue to ramp up, though some are starting to think that they've reached a pinnacle at that point, and at that point, if you're unable to increase capacity beyond where they're already at, then you will start to see some of that increase continue and be stabilized. And gold, just a little bit of pullback right back to the ABM yellow. Nothing major there. It's just going to be back and forth. There's no strong impetus because, again, the fundamentals for economic growth are still sketchy. It's a back and forth, and I think that there's a lot going on in the market, at least from a player standpoint, on changing the idea of the market multiple as opposed to expectations of blood earnings or anything like that. So it's more like a status quo, and the potential that when things get started, if they do, they will ramp up quickly. And so this really comes down to Trump's agenda. I know that a lot of people talk about the budget things being dead on arrival, but it's an interesting thing. The executive branch has quite a latitude as to just telling its departments not to spend the money. And it just sits there. So you can approve it, but if nobody uses it, it's just sitting there. So it'll be interesting to see what happens with that. Could have some broad implications for growth, because everyone assumes that the only growth that exists has been the government putting $1 trillion extra into the economy, and we could argue that under the previous policies, but we still haven't seen a change in any real legislation that's going to jumpstart anything, at least from a short-term stimulus or even tax breaks. So most of this is just an improved business climate of reduced regulation, but that's going to be slow and a little bit further down the road before it really impacts things. So we're just in a holding pattern, and it's kind of interesting that for being in a holding pattern to have this kind of a move, but this was all that political fallout of the leaks that were taking place, and supposedly there's going to be some arrests. We'll see if that takes place, but I think the natural impetus, though, is still to push against this 24 and move to the 24.50 range, and then we'll have to really evaluate from there where we're at, because we'll be getting pretty elevated, and you'd have to actually see some concrete results before that's going to be able to sustain itself. As always, though, trade well, and we'll continue to follow the readings.